This is Horizons Middle East and Africa, our top stories this morning. Asian stocks rise as traders gear up for the holidays with high hopes for a year-end Santa rally. The US pursues a third tanker near Venezuela as President Trump intensifies the oil blockade, targeting Nicolas Maduro's government. And Axios reports that Israel's warning the Trump administration over Iran's missile exercise, saying it could be preparing for a strike on Israel. We're live in Jerusalem with the details. It's just gone 9 a.m. across the Emirates, 5 a.m. here in London. I'm Lizzie Burden in for Jemana Basechi. A very good morning to you. We are nearly there, and we actually have traders pretty optimistic towards the end of the year. Taking a look at how these markets are faring this morning, and we have futures pointing higher stateside and already seeing gains in the Asia session. They are lower futures in Europe, however, but flip cross asset, and we've got gold and silver at record highs this morning on the geopolitical tensions, oil up too on the Venezuela blockade. And if we just take a look as well at the 10-year US Treasury yield, 4.16 is where we are right now, ahead of the US growth data coming out later on this week. And really, though, JGB yields are where you want to be focusing, so we'll bring you more in that in just a moment. I mentioned that oil's higher on the Venezuela story. Let's take a closer look at the big picture in 2025, because actually you've got crude set for its biggest drop since 2017. Peace in Ukraine, a hopeful possibility, and the oversupply concerns dominating as well. So we're perhaps looking more for a floor than a ceiling when it comes to the oil price. Largest annual drop since 2018 as per that chart. Now let's get over to Asia for a look at how markets there are faring. We can go to Min Min Lo, who's waiting for us in our Hong Kong studio. Min Min.
Hey Lizzie, we are firmly in the green in the Asia session here, and certainly it seems like we could be set up for a center rally after all. After the volatility that we saw last week, we did see buyers come in on Friday night in the US session to stabilize the tech sector, and certainly over here in Asia, it seems like the tech sector is driving the stocks up, especially on the Kospi, the TAIEX, the Nikkei as well, up by close to 2%, and that's really being supported by the yen as well. We did see yen continuing to weaken after the BOJ rate hike last week. Investors not convinced with Ueda's commentaries that he's going to continue hiking rates fast enough, and some analysts are saying that 160 on dollar yen could be in sight as futures contracts point to more demand for shorting the yen. And you can see the yields here also rising across the curve. The 2-year yield is now at the highest since 1997, and that really doesn't bode well for an upcoming auction of the 2-year bonds on Christmas Day. So we'll be keeping an eye on that. Lizzie.
Okay, Min Min, good to see you. Thank you so much. Min Min Lo in Hong Kong there. Now, for more on the markets, Abdul Kadir Hussain, MD for Fixed Income Asset Management over at Arqaam Capital, I'm pleased to say, joins me now. Good morning to you, Abdul. I want to start with your outlook for 2026, because it looks like you're cautiously optimistic, at least when it comes to the US economy. What are the biggest risks into the next year?
Yeah, I think the biggest risk clearly, I think, is the market sort of underpricing inflationary risks. I think that most people are quite complacent that the Fed will cut at least once, if not twice, next year, and that inflation is well under control. I think if that narrative somehow changes and you start seeing inflation reaccelerating, that could cause significant volatility not only in rates markets but also overall in risk markets. So I think that's probably our biggest thing that we're watching out for. Obviously, some of that is also going to be dependent on what happens with the Fed, and if you get a dovish Fed and how that sort of plays into term premiums. So the rates market is probably the main area we're looking at.
But you're not worried about Fed independence, are you?
No, I don't think we are. I think, for us to think that the Fed is going to do something unconventional like, Turkey a couple of years ago, I think that's clearly not going to happen. If the data is pointing towards, tightening monetary policy, I think the Fed is going to do that. It might do it with a lag. It might do it, in a more dovish manner. But I don't think they would go unconventional. So I don't think that Fed independence is an issue at this point.
Okay, and when do you expect artificial intelligence to deliver serious productivity gains? And do you expect that to come with job losses? How much equity volatility do you expect is needed to get there?
Yeah, I mean, I think that that AI it has several areas where it can impact. I think next year, obviously, equity valuations, and if you do get any kind of correction on that, is going to be an issue. Productivity and sort of how it feeds into inflation. And the third area where it, I think, has a big impact, at least as far as fixed income is concerned, is the supply. You have significant debt supply, potentially coming out of not only out of direct AI, tech companies, but also out of power utilities that are building out infrastructure to meet the demand for power. So if you get significant issuance out of sort of the AI sector, that's going to affect some of the crossover demand that's going to come into the EM space and spreads in EM. So I think we're looking out at multiple areas. Obviously, if you do get that correction in equity valuations, that's also going to potentially cause rising spreads in the EM space.
Okay, well, let's turn there next, specifically to Saudi Arabia, because it's been one of the busiest issuers in emerging markets this year. You've got oil prices softening, as we were just discussing, also budget pressures mounting. How much sovereign borrowing do you actually expect in 2026?
Yeah, so in 25, they had about 67 billion across the entire spectrum. So sovereigns had about 20 billion, and the rest of it came from banks and GREs and corporates. I think we're going to get at least as much, if not, 5 to 10% more across all of those sectors. So somewhere between 20 to 25 billion directly from the sovereign, and potentially somewhere between 45 to 50 billion across the rest of the universe. So it is, it was almost 45% of total issuance out of the MENA region in 25, and I think it's going to be, at least that much in 2026.
And beyond the sovereign, how active do you expect the Saudi Public Investment Fund and its portfolio companies to be in debt markets next year?
Yeah, I mean, I think the sovereign is obviously trying to get the companies to fund themselves and to come to the markets themselves, and you saw that particularly in the banking sector in 25. You're probably going to get issuance again across PIF. Across Aramco, potentially across Saudi electricity, and plus the sovereign. The question obviously is going to be how much does the market take before it starts sort of really widening spreads, and that's where my concern about a lot of issuance in DM markets comes from, because one of the sources of demand in 25, which caused spreads to remain tight, with crossover investors from DM. And if that happens to go away, then that could be one of the headwinds for a lot of Saudi issuance.
Well, yeah, are you seeing signs that the market's getting concerned about how much Saudi paper's coming through?
Well, I mean, 25 you didn't, because like you said, oil prices actually fell significantly in 25, and yet Saudi spreads, even despite the record issuance, tightened significantly, but that was primarily due to huge inflows into EM ETFs, in demand from Asia, crossover demand, and also Qatar and Kuwait exiting the MB, which sort of directed some more flows into Saudi. I think we're still confident about EM inflows inflows into EM ETFs in 2026, but a little bit less confident about crossover demand. Potentially you do have UAE potentially exiting the index, so that could also cause some flows. But and also with JGB yields, which you mentioned earlier, going higher, Asian demand potentially also could be at risk. So if you do get weakening in Asian demand and you do get weakening in crossover demand, then you could see some spread widening if Saudi issues as much as it did in 2025.
All right, great to get your take. Abdul Kadir Hussain, Fixed Income Asset Management Managing Director over at Arqaam Capital. We thank you so much. Now, to a look at some of our other stories we're following this morning. President Trump's top economic advisor says that a Supreme Court ruling against the administration's tariffs regime would create a major administrative problem. Judges are currently weighing a legal challenge to the tariffs that Trump has imposed on dozens of nations. Kevin Hassett says that the challenges of refunding the levies should deter the court from ruling that way.
We really expect the Supreme Court is going to side with us. And I also think that if they didn't side with us, that it's going to be pretty unlikely that they're going to call for widespread refunds, because it would be an administrative problem to get those refunds out to there. But basically, whoever paid the tariff, like actually cut the check to buy the thing, would be the person who would be getting the refund if there were one.
Meanwhile, the Trump administration is defending its move to pull several pictures from the latest release of documents related to Jeffrey Epstein. An image of a desk drawer with a number of photos, including one showing President Trump, was among those removed from the department's website before being restored. Deputy Attorney General Todd Blanche says that it was done out of concern for Epstein's victims.
You can see in that photo, there's photographs of women. And so we learned after releasing that photograph that there were concerns about those women and the fact that we had put that photo up. So we pulled that photo down. It has nothing to do with President Trump. There are dozens of photos of President Trump already released to the public seeing him with Mr. Epstein. He has said that in the 90s and early 2000s, he socialized with him. So the absurdity of us pulling down a photo, a single photo, because President Trump was in it, is laughable.
Coming up, we turn to White House geopolitics. US President Donald Trump intensifying a blockade on Venezuela as the US is said to be pursuing a third oil tanker. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, oil prices are in focus today after Bloomberg reported that the US is still pursuing a third oil tanker near Venezuela. President Trump has been intensifying an oil blockade on Nicolas Maduro's government. And for more, we can bring in Bloomberg's Stephen Stapczynski. Stephen, good morning. Just bring us the latest on the scale of the blockade and how much it's actually choking off oil. How much pressure is this putting on Maduro's government?
Well, this is putting a lot more pressure than it was just before. So for those just catching up, the Trump administration had basically taken a sanctioned oil tanker a bit back earlier this month, and that was seen as their operation. The blockade would be for sanctioned oil tankers. Not all of Venezuela's oil is sent on sanctioned tankers. There are a number of dark fleet vessels that have not been sanctioned by the U.S. Now, over the weekend, this has changed. The Trump administration boarded a vessel that was not sanctioned, and now they're pursuing another one that hasn't even loaded any crude yet. So this is certainly them trying to put a maximum pressure on companies to not be able to at least export or take any of Venezuela's crude that is sanctioned by the United States. Now, the small caveat, of course, is that Chevron has a waiver to allow them to export some of it. So it doesn't affect everything, but it is going to affect essentially most of it.
OK, so where does it leave oil prices in the context of oversupply pressures as the bigger picture?
You know, Venezuela, it's not an enormous producer in the grand scheme of things. They have very large reserves, but they're only producing less than 1% of global demand. So if the Trump administration were to bring all of their exports down to zero, yes, you would probably see a knee-jerk reaction where you would see an increase in prices. People are trading on sentiment. Maybe there will be a mixed match between what China has to buy and they have to find other supplies elsewhere. But in the grand scheme of things, it doesn't really affect the global supply balance because the market is facing quite a large oversupply going into 2026. Demand hasn't really increased more than that supply is being added to the market. OPEC Plus is adding barrels. U.S. supply is very strong. There are other countries as well adding more. And so when you look at the larger supply-demand balance, even if you remove these barrels, you might see an increase in prices for a few days, but we are going to be trending likely downward, according to banks and analysts, just because there's so much more supply than there is demand, especially going into next year.
Okay, so Brent at $60 a barrel right now, but Venezuela, as you say, not the biggest player in terms of the broader oil market. But this, of course, hugely significant for the Venezuelan economy. Where does the the pressure leave the Venezuelan economy?
I mean, yes, so that's the bigger impact, right? This is the Trump administration putting maximum pressure on the Venezuelan leadership. This is them likely trying to push for regime change. This is hurting them where they need the profits the most, and that's oil. And that's one of the ways that they were able to get real currency, real dollars, real anything to try to prop up their economy. But without this, their most valuable export, they are in big trouble. So where does that put them? What does that leave the current government? And this is going to put them on the back foot, especially if the Trump administration continues with this pressure, if they look at potential military strikes. This is them really tightening the noose around the current government.
All right, Stephen, thank you so much for that latest update. Stephen Stopczynski there, we thank you. Coming up on the programme, President Trump expands the US travel ban, adding new countries and tightening entry restrictions. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London, where it's 5:20 a.m. Well, President Trump is expanding his travel ban, adding new countries to a growing list of nations facing full or partial entry restrictions. The White House says that the move is aimed at tightening national security and migration controls too. For more, we're joined by Bloomberg's Anthony Osei-Brown. Anthony, just walk us through how the Trump administration's expanded this travel ban. What are the new restrictions here?
Yeah, so basically the new restrictions are around, they are basically to partial and full travel bans. And the partial bans include, include the immigrant and non-immigrant visas. And then there are full family unification visas that have gone on the ban. So it's quite extensive now. A lot of nationals may not be able to travel to the US under these new travel restrictions. And it's far, far more expensive than the 2017 visa ban. From 7 countries in the 2017-2022 visa ban, we now have 39 countries fully included in the travel bans.
And to what extent was this inevitable, expected, and how much is it the product of recent events?
Well, I think it's always been expected. Trump had hinted several times that he's looking at this direction. What he needed was just a trigger, and the trigger was the killing of the U.S. Marine by an Afghan national, and that just triggered his decision to expand the travel ban. So it was inevitable. People knew that this was coming, and what's the excuse? They just needed an excuse to make it happen, and the excuse was the killing of the U.S. Marine in Washington, D.C., and that just gave him a reason to expand the travel ban and included several countries, which is now based on national security concerns. His main argument that these countries have poor security visa vetting processes, and so this makes it likely that people with bad security intentions could easily get into the United States. So he's going to use this as an excuse to get them out of the US.
And I say this only partly tongue-in-cheek. To what extent will it affect the World Cup?
Sadly, no. Not much, because most of the countries, like we have 26 countries in this travel ban, coming from African countries. These are countries that would naturally not have had much opportunity to go and watch the World Cup because most of them are poorer. They would rather watch the World Cup from their home countries on televisions and everything. Yeah, but it takes some shine away from the World Cup because people will feel the enthusiasm for watching the World Cup will be lowered by the fact that these countries are banned from going to the World Cup physically to watch it. Not that many of them would have gone there anyway to watch these countries. But yeah, it takes away from the celebration of the World Cup, which is supposed to be a global event where everybody is included. But then it's going to, the World Cup is now going to take place under the shadow of certain number of countries banned from entering the US. So that's to the extent it will affect it. But in terms of attendance, I think most of these people from these countries would not have attended the World Cup anyway, fiscally in the US, or possibly the US would not even have given them visas to attend. So, it just cast a shadow over the whole World Cup event.
Okay. Anthony, good to see you. Bloomberg's Anthony Osei-Brown there. We thank you for that update on the travel ban. Now, for a look at some of the other stories we're following this morning, Nigeria has secured a $500 million loan from the World Bank to boost lending to small and medium-sized businesses. The facility will be managed by the Development Bank of Nigeria and includes credit guarantees to businesses considered too risky. The World Bank says that the programme could mobilise nearly $1.9 billion in private capital and support 250,000 firms. Elsewhere, Fitch has cut Gabon's credit rating deeper into junk territory, citing rising debt risks and mounting pressure on government finances. The ratings agency downgraded the nation's long-term foreign currency rating for the second time this year to CCC-. Fitch says it assumes no new support from the IMF in its base case scenario, citing obstacles including the government's expansionary fiscal policy and accumulation of external arrears. Well, checking in on these markets, we've got futures pointing higher stateside. Already we saw the gains in the Asia session. They continue with the MSCI Asia Pacific Index up 0.9%. We had that rally in US stocks on Friday. European futures, however, pointing south. Euro Stoxx 50 futures down 0.2%. And if we flip over to your Treasury space, we have the 10-year yield up 2 basis points at 4.16. The 2-year up a basis point at 3.48, and at the long end, the 30-year at 4.84 right now, up 2 basis points. As we look ahead, of course, to that growth data stateside later on this week. Also, just checking in on oil. Of course, we were discussing the competing currents in the oil market with Stephen Stapczynski a moment ago. Brent now up 0.9% at $61 a barrel. We have the intensifying blockade on Venezuela. We also have hopes of a peace settlement for Ukraine. But the big picture really is the oversupply concerns, and that's set to be the dominant theme into 2026. But coming up on the programme, we are going to take a look at Bitcoin. Bitcoin bracing for more swings with $23 billion in options set to expire, really putting pressure on the crypto markets on edge to end the year. Well, that conversation with Yoni Assia, founder and CEO of eToro, coming up next. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. Asian stocks rise as traders gear up for the holidays with high hopes for a year-end Santa rally. The US, meanwhile, pursues a third tanker near Venezuela as President Trump intensifies the oil blockade targeting Nicolas Maduro's government. And Axios reports that Israel's warning the Trump administration over Iran's missile exercise, saying it could be preparing for a strike on Israel. We're live in Jerusalem with the details. It's just gone 9:30 a.m. across the Emirates, 5:30 a.m. here in London. I'm Lizzie Burden in for Jemana Basechi. Welcome to the programme if you're just joining us. You've nearly made it. We're nearly at the end of the year and things are looking optimistic as we head towards it. We've got futures pointing higher stateside by 0.2% on S&P E-minis, lower here in Europe, down 0.2%, but already we're seeing gains in the Asia session of about 0.8%. We had that rally on Wall Street to end last week. Let's see if it continues into Monday's session. But flip the board over to the cross-asset picture, and you've got silver and gold at record highs on the geopolitics that we've just been discussing. Gold up at $4,405 a troy ounce, up more than 1.5% right now. We have oil up to $61 a barrel on Brent, as we've been discussing Trump intensifying that Venezuela blockade, and the 10-year US Treasury yield there not doing too much at 4.16 as things stand. Of course, we look out for that US growth data later in the week. But the real action in your bond space is happening over in Asia. So let's get over to Min Min Lo. She's in Hong Kong with a look at how Asian markets are faring. Min Min.
Hey, Lizzie, Asia markets largely in the green today, but we're watching the chip stocks in particular in China because Mothreads, that's a company that debuted on Shanghai Star Market a couple of weeks ago, had announced over the weekend at a company event that they are launching 2 new generation of chips, including an AI chip that is better than Nvidia's Hopper series chips, the H100 and H200 chips, and is closing the gap with the current Blackwell series, and that is a significant development for the domestic substitution theme in China, and it really eliminates the need for Chinese companies to buy from Nvidia. And here you can see most of these chip-related stocks, SMIC up by 7%, Hua Hong as well up by 5%. But we're also watching 19 other companies that U.S. lawmakers are calling the Pentagon to list as Chinese military companies, and some of these companies are private companies, the likes of DeepSeek, for example, the robotics company Unitree. Here you can see Wuxi AppTech, that is a pharma company. Goshen is a lithium battery company. So pretty wide-ranging sectors that are affected. If Pentagon does list them as military companies, it means the Department of Defense won't be able to work with these companies, and it also sends a warning to other companies trying to collaborate with these companies. It is a blow to some of these companies if they get listed when it comes to any plans to expand overseas or work with overseas suppliers. Lizzie.
All right, Min Min, great to see you again. Thank you so much. Min Min Lo there, out of Hong Kong. Now, Bitcoin set to end the year lower despite a risk-on period for stocks and demand for havens like gold. Around $23 billion worth of contracts also set to expire on Friday, threatening to amplify the already elevated volatility in the crypto market. So we've got the perfect guest for you on this very subject, and that is Yoni Assia, CEO and founder of eToro. Really good to see you, Yoni. Thanks for joining us this morning. You're very, very optimistic, it has to be said, when it comes to Bitcoin. People talk about the UAE as the Wall Street of crypto, but you go further. You've saying that Abu Dhabi is going to be the global hub. So just talk to us about how close we actually are to that.
Well, first of all, I think this was a very good year for the crypto, Bitcoin, blockchain narrative in general. What we're seeing right now is actually capital markets copying the crypto markets. With a very strong sentiment across tokenization, across a lot of people recently. I've just been to the Abu Dhabi Finance Week. People are talking about the tokenization of real estate, of private markets, of public markets. We've seen this year capital markets copying crypto markets, moving 24/5 and now moving 24/7. Abu Dhabi, the capital of capital, has always said that they wanted to take a significant part in that transition into the digital asset economy and the digital space, which we're definitely seeing scaling up across the world with more than 400 people now with digital assets. And now we're seeing also the US saying that they want to lead in crypto, that they want to see US capital markets moving on chain. So we're seeing a lot of trends right now happening from capital markets into crypto markets.
Well, hold on a minute, Yoni, because you've got Bitcoin heading for its worst quarter since 2022. It's set to end the year lower, as I say, despite the general risk attitude in stocks and the demand for havens like gold. I'm interested why you see it as the digital gold in that case.
Well, I've been in crypto since 2011. Luckily at eToro, we caught it very early on the intersection of finance and technology. So we actually looked at Bitcoin back at $5 per Bitcoin in 2011. Then we saw it rise to $1,200 and listed it on eToro back in 2013, just moments before it crushed back in, I'd say, the first crypto enter in 2014. So we've seen several cycles into the crypto markets, into Bitcoin price. I would generally say in capital markets, when everybody's expecting something, you know, an asset to move in a certain direction, in many cases, sometimes it might surprise. So I think a lot of people are surprised while this the friendliest administration in the US to crypto, a lot of developments in the technology part of the crypto space and Bitcoin space with recent even tokenization on Bitcoin, to see price actually slide this year on Bitcoin and generally in crypto markets. People are talking about the cycles of course, of the crypto markets. But my view on capital markets and Bitcoin markets is always a long-term view. I've no doubt that this is a correction eventually into higher prices in Bitcoin and into the transition of more than $100 trillion becoming digital assets over the next 20 years.
Okay, so a long-term view. You had Eric Trump telling Bitcoin Miner 2024 that you're going to see Bitcoin hitting $1 million. How long-term is that view? Is that sort of talk helping the market, or is it just fantasy?
I think it's helping the market. I don't think it's fantasy. I think if you look today at, and it's a great time to look at the market cap of gold and silver right now, hitting all-time high. I remember my grandfather talking to me about buying gold in the 70s for $50. It's coming up to $5,000, I think, with $4,400 right now. So that's 100 times on gold since the 70s. So I think deflationary assets like Bitcoin, like gold, are actually positioned to grow over time, basically reversing, or reversing the correlation to inflation, which has been growing in recent years, especially in COVID. So I do think Bitcoin represents digital gold. We need to remember gold has been with us for 5,000 years, powering a lot of the global commerce. Bitcoin is with us only about 15, 16 years, powering the digital economy of a new generation of Gen Y, and even more than that, Gen Zers and Gen Alpha, who are more crypto native. And I think people are looking at Bitcoin as their digital gold, but that's younger generations who are going to amass over $100 trillion in the next 20 years. But right now, the vast majority of assets in the world are still held with central banks, financial institutions, and people over their 70s.
All right, Yoni, we'll see where it goes in 2026. But for now, good to see you. Yoni Assia, founder and CEO of eToro there. Well, for more of these stories, looking into the intersection between wealth and power in the region, do sign up to our Mideast Money newsletter. You can find it on Bloomberg.com. Well, the United Arab Emirates state oil company Adnoc, meanwhile, has secured $11 billion in financing to develop massive offshore natural gas fields. We can go now to Bloomberg's Stephen Stapczynski for more. Stephen, hi again. Just talk us through why Adnoc's ramping up supply against what we've already discussed, a backdrop of looming supply gluts.
Yeah, I mean, I think Adnoc's view is they're not looking at the short-term site on the market, right? The global liquefied natural gas market, global gas markets are facing a glut of supply that will push down prices, that will keep prices lower probably through the end of the decade. What Adnoc has strategically been doing is look at, okay, where can we find ways to get into this market like our neighbor Qatar? Qatar is the world's biggest exporter of liquefied natural gas. They've made a fortune doing it. They've locked in long-term contracts, and they've been doubling down on the fuel. They're looking to expand their capacity more than 50% over the next 5 years. Now, Adnoc is taking a very similar approach. They're looking at the future beyond oil, right? Oil, peak demand for oil, depending on who you ask, could happen this decade. Chinese demand as well isn't showing up. Prices are lower. Now that goes to natural gas. They see natural gas as the transition fuel. It's something that's going to backstop intermittent renewables. And they just actually pushed forward recently something called the Ruwais LNG project. It's one of their biggest gas export projects that they push forward, and they're also trying to find customers for that. At the same time, they want their economy to run on gas as well. So overall, they just see gas as the option at home, as also abroad, as they see it as the fastest growing fossil fuel, and that's why they're really kind of tripling down into it. We've been seeing.
Okay, so who's involved in the financing then? How's it going to be used?
Okay, so we've got quite a few folks involved. So first off, they've brought in Italy's Eni as well as Thailand's PTT to be among those who are arranging the financing. The banks include, of course, Abu Dhabi's Commercial Bank, Abu Dhabi Islamic Bank, and the Agricultural Bank of China. Those as well from abroad include Citigroup, Standard Chartered, and as well as the UAE's largest lender, the Abu Dhabi Bank, and Emirates NBD rather. And now the way it's going to be used is for financing this project to produce 1.8 billion cubic feet of gas a day. Now, that's going to backstop declining production elsewhere, and it's going to help them not only be able to keep their current levels, but also push forward with the expansion of LNG exports.
All right, Stephen, appreciate all your reporting this morning. Stephen Stapczynski there. Thank you so much. Well, we're going to stay in the Middle East next. Coming up, Israel warning the Trump administration of an Iranian missile exercise. We'll be live in Jerusalem with the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, Axios is reporting Israel has warned the Trump administration that an Iranian Revolutionary Guard Corps missile exercise could be preparations for a strike on Israel. Prime Minister Benjamin Netanyahu is expected to travel to the US later this month to meet with President Trump. It comes as talks on the phase 2 of the Gaza peace process are slowly advancing, with US Secretary of State Marco Rubio saying that the next step should be naming a board of peace.
The next step here is announcing the board of peace, announcing the Palestinian technocratic group that will help provide daily governance. And then once that's in place, I think that will allow us to firm up the stabilization force, including how it's going to be paid for, what the rules of engagement are, what their role will be in demilitarization and so forth.
Let's go now to Jerusalem and speak to Bloomberg's Dan Williams. Dan, good morning. We had Witkoff meeting with senior officials from Egypt, Turkey and Qatar to advance the talks on the second phase of this Gaza plan. What do we know about those talks?
Well, we have a reading from Witkoff himself, a statement he put out at the end of those talks, saying effectively that those powers, it's worth remembering that when it comes to Egypt and Qatar, these are long-term mediators between Israel and Hamas in Gaza. Turkey is on the periphery. It wants to be a stakeholder. That is resisted by Israel, given tensions with Ankara going back well over a decade. Nonetheless, these are three significant US-aligned powers in the region, and according to Witkoff, they basically affirmed that phase 1 had proceeded largely as planned. They affirmed the need to move to phase 2. These would seem to be baby steps. Hard to know exactly where this is going, but all parties we've spoken to have indicated that that will firm up, or is expected to be firmed up, toward the end of the month, when the Israeli Prime Minister Netanyahu is expected to be meeting also in South Florida at Mar-a-Lago with the US President Trump to discuss prospects for moving to that phase 2 of the Gaza plan.
And you'll be at that meeting in Mar-a-Lago. What's on the agenda?
Not much discussed publicly so far. In fact, officials are saying they're still trying to work that out. But it would appear, especially given from what we just heard from Rubio, that appointing the Board of Peace is really where all this begins and from which all of this flows. This would be the Supreme Oversight Committee, headed by Trump himself. We're told he's looking for other serving national heads of government or heads of state to be there alongside him. Underneath the Board of Peace would be a so-called executive board, potentially with the former British Prime Minister Blair, with Witkoff himself. Beneath that, a CEO, and beneath that, the Palestinian technocratic government, that interim government that would run day-to-day activities. So a quite complicated, stratified system in place there. However, when you ask officials involved in this whether there's some room for skepticism about whether this will go ahead, they point out that just 3 months ago, no one thought there could be a ceasefire in Gaza, a recovery of the last living hostages, in fact, a recovery of all dead hostages held by Hamas since the October 7th attack, with the exception of one body yet to be recovered. There was also a UN Security Council resolution endorsing the Trump plan just a couple months ago. So they look at these achievements as markers of how, with quiet, patience, and with hard work behind the scenes, more can be achieved. I think that will become clearer toward December 29th, when and if that meeting goes ahead. It's worth noting the White House is yet to formally invite Netanyahu, yet to formally announce the meeting will go ahead, but the Israelis are treating it as a given. So while much of the world is away on Christmas, New Year's vacations, there will be hard work being done at Mar-a-Lago to push ahead this Gaza plan.
OK. Well, we appreciate all your hard work. Bloomberg's Dan Williams, excellent coverage. We thank you so much. Now, for a look at other geopolitical stories we're following this morning. Israel's finance minister says that the Security Cabinet gave legal status or authorised 19 West Bank settlements. In total, he says the government has given legal status or authorised 69 West Bank settlements in the past 3 years. Meanwhile, the US launched large-scale airstrikes on more than 70 targets across Syria, fulfilling President Trump's vow to strike back after the killing of 2 US soldiers. US Central Command said on Friday that fighter jets, attack helicopters and artillery targeted ISIS infrastructure and weapon sites. Defence Secretary Pete Hegseth posted on X saying that the move does not mark the beginning of a war, but is a declaration of vengeance. And US Special Envoy Steve Witkoff says the Trump administration officials held productive meetings with Ukrainian and European counterparts in Florida. He says discussions covered the existing 20-point peace plan, a US security guarantee framework, and economic development. Ukrainian President Volodymyr Zelensky also called the talks constructive, but noted that signals from Russia remain only negative. Well, coming up on the programme, China's More Threads is unveiling a new generation chip lineup set to challenge developers' dependence on Nvidia. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Verdon in London, where it's 5:52 a.m. Well, China's More Threads has introduced a new generation of chips aimed at reducing AI developers' dependence on Nvidia's hardware. Let's get more with our China correspondent Min Min Lo now. Min Min, hello again. Just talk us through what these new products do. How do they actually compare with Nvidia's chips?
Yes, so More Threads had a company event over the weekend, and they unveiled 2 new generations of chips. They are called Huashan and Lushan, named after Chinese mountains. So Huashan is an AI inference and training chip that the CEO says is going to be better than Nvidia's Hopper series chips. So that includes the H100 and H200 chips. And he says it is closing the gap with the Blackwell series chips. That's the latest line that is available from Nvidia. So this is a very significant development because we know that Nvidia just got approval from the Trump administration to sell the H200 chips to China. China hasn't yet given a clear guidelines to its companies whether or not Beijing will be allowing companies to buy from Nvidia. But this breakthrough shows that there really isn't a need for Chinese companies to rely on Nvidia here because they can already make chips that are better than that. So certainly an important development. The company says that it will enter mass production for these chips as soon as next year. It also unveiled the Lushan chips, which are for graphics processing. The company saying that it has 15 times better performance for gaming. It also unveiled this new GPU architecture that could allow the linkage of as many as 100,000 chips together to form this supercomputing cluster, which again the company says is 10 times more energy efficient and can increase computing capacity by 50%.
Well, it all sounds very impressive. What stands in the way, then, of More Threads closing the gap with the US?
Yeah, so one big challenge is that there is still all these restrictions when it comes to chip-making equipment, the lithography machine. So More Threads, for example, rely on foundries such as SMIC to produce its chips, and it's really being capped by what SMIC can do, right? Because SMIC's ability to make 2 nanometers or sub-2 nanometers chips is still very limited at this point, and that's what TSMC is already working on. So that's one. Number 2 is that More Threads is built upon its own proprietary computing platform. So it has its own platform called Musa. Nvidia has its own called CUDA. So companies that have built their software around Nvidia's chips and architecture will require a fair bit of adaptation to be able to integrate to the More Threads system. So there's a bit of transitional cost there. And when it comes to that supercomputing cluster, a lot of it is going to hinge upon connectivity. When it comes to the network sort of fabric, these are the hardware that allow the chips to sort of talk to one another, the end-to-end bandwidth to ensure that there is enough server capacity to crunch a huge amount of data. How reliable that entire system is still untested at this point. So that's something to continue watching.
And of course, we know that US lawmakers are calling for more Chinese firms to be listed under the Pentagon's list as military companies. So we shall keep an eye on that. For now, Min, really good reporting. We thank you so much. Min Lo there, our China correspondent. Well, let's check in our last couple of moments here on these markets. We've got futures pointing higher stateside, up 0.25% on S&P E-minis, even higher for Nasdaq futures, up 0.4%. Eurostock 50 futures, though, in the red as things stand, not following the moves in the Asia session. The MSCI Asia Pacific Index up 0.9% at the moment. And just looking into your bond space, we have the 2-year Treasury yield up a basis point at 3.48%, the 10-year up 2 basis points at 4.16, and we do keep one eye on oil as well. Brent up more than 1% at $61 a barrel. Of course, we continue to monitor this blockade on Venezuela by the US. But that does it for Horizons Middle East and Africa. I'm Lizzie Burden in London. Do stay with us for Daybreak Europe. Oliver Crook is coming up next. This is Bloomberg.